when it comes to selling life insurance policies, you can still make profit without misrepresenting the product or the company. Meaning, I focus on term life policy. If you're a 20-year-old person and you get a $500,000 policy, that would cost you $7. On the other hand, if you're 70 years old and you get a $500,000 policy, it would cost you about $200. So you see the difference. The older you are, the more expensive it gets. Again, we're talking term policies here. And the term policies are very, very straightforward policies. You get sick, you get into an accident, or you die, you'll get the money. Of course, when you die, your family, your beneficiary, your heirs, whoever your son to be, your beneficiaries will get the death benefit. And if you get sick or you get into an accident, you can advance your living benefits, which means if you have a $500,000 policy and you get into a major accident or major illness, you have access to that $500,000. All the policies that I sell, by the way, come with living benefits. I had a client a couple days ago that I was trying to offer him a term life policy, 30 years. He's 49 and his monthly premium was only like $200 for $500,000, which is very good. But he somehow talked to somebody or saw something online that made him question or inquire about an IUL. And the reason I don't like IUL is because, first of all, it's a policy that's pitched as an investment, which is not an investment. And sometimes they give you a floor of 0 and a cap of 12 as an introductory offer. And then after the first year, when you get your statement, instead of going from 0 to 12, you're down to from 0 to 6.7%, for example. So they state in their policy that they can change that anytime they want. So, and another thing too that I've noticed that people, they rely on as they get older, their premium is going to increase because it's based on your age to have the death benefit. And people tend to rely on their cash value in their later years to cover their monthly premium. And sometimes there isn't enough money in the policy to actually cover that monthly premium. So the policy tends to lapse after so many years, and people...
Sir, is there an entrance there?
You can keep... Hold on a second, guys.
I'm sorry.
That's okay. You can, not an entrance, you can get back on 401, but there's a while to go, like half an hour.
Okay, that's
Yeah.
fine.
Yeah.
Thank you.
Basically, if you take it, it'll bring you back here, yeah.
Okay.
Yeah. So, what was I saying? I forgot. Oh yeah, the 0% floor, which means if the IULs are tied to the S&P 500, so it performs according to the S&P. So if the S&P is up 20% and your policy says your cap is 0 to 12, which means if the S&P 500 is performing at 20%, you get 12% of the gain. So you're up 12%, which is pretty huge. And if the S&P goes below, if the S&P goes below the if it goes negative 10%, you don't participate in the loss. You only participate in the gain. So basically, you have your floor is 0, so you stay at 0. So no changes. You don't have no gain, no losses at that point. Even though the S&P is actually is in the negative. And yeah, I know what I was talking about. So what could happen down the road, your cash value, say you're paying $12,000 a year, yeah? And your cash value after 10 years, say about 120,000, yeah? And you stop paying into that policy, you can actually do that. You can just depend on your cash value to keep the policy in force. You know, basically they'll take payment from the cash value to keep the policy or prevent the policy from lapsing. I hope that makes sense, guys, because there's a saving account in the IUL Index Universal Life policy. By the way, IULs are permanent policies and they'll cover you for the rest of your life. It's not something it's like a whole life insurance, but it's tied to the S&P 500. I'm so hot. I hope you guys are out there exercising. Look how gorgeous it is. It's such a beautiful day. Look at that. So that's why I always recommended the term life policies, because it's straightforward. You pay $100, you get $1 million, you get $500,000, depending on your age and your pre-existing conditions, if you have any health issues or not. The healthier you are, it's based on gender, age, and tobacco usage. The younger you are, the healthier you are, and if you're a non-tobacco user, of course you're going to get the best. It's called Preferred Plus rates. So with the term policies, look at the river, guys. Isn't that beautiful? The water level is pretty low right now because it's super, super hot. But it rains quite often here in North Carolina, so this thing will probably be moving tomorrow. Anyway, so what was I talking about? Yeah, you spend $100, you get $500,000 or $1 million in death benefit, which also includes, I want to emphasize, it includes the living benefits feature. So in the event of critical, chronic, or terminal illness or accident, you have excess. You can accelerate the death benefit and use it while you're alive to basically just to take a couple years off to recover from sickness or injury, or go see a specialist, or pay off your mortgage and put some money in the bank. Make sure the spouse and the children are taken care of, and don't lose your assets. You know, because the minute we get sick or injured, we know that paycheck's going to stop coming in. So you don't want the bank to come and take your home, and the vehicles get repoed, and saving accounts get liquidated, and 401k cashed out. It can turn pretty ugly very quickly, because we all know how expensive medical bills are. And even if you have the best insurance in the world as far as health insurance, they still don't cover everything. That doesn't mean nothing these days. You really need a backup plan, and the life insurance policy with the living benefits is the best route. If you guys are interested in learning more about this, 910-447-6508. Call me. I would love to explain this to you in details. This is a free phone call. I am an insurance broker. I have access to all the major carriers, so I can shop around and find you the best policy that fits your need. But yeah, the client that I was talking to decided to go with an IUL. I didn't get it. We were just texting back and forth, so I didn't get a chance to speak to him. I'll find out more and share it with you on the next video. But again, his payment would go from like $200 to almost $800 for the same amount. Isn't that crazy? That's quite high. You have to pay $800 a month to have a $500,000 life insurance policy, comparing to like $200 to have the exact same coverage. And both policies come with living benefits, so in the event you get sick or you get into an accident, you'll have access to the cash value. You can advance that money right away to use it however you like. You can even use that money to go on a vacation. What else do I want to discuss with you guys? There's a lot of points that I want to talk about. Oh yeah, and these policies are all paid out tax-free. There's no financial tools out there. Whew. I think I'll stop here for just a second under this beautiful tree. But there's no financial tools out there that would actually pay tax-free except for life insurance. In the event you die, your family will collect the money, the face value tax-free. If you're injured or sick, you collect the money tax-free. You can do a lump sum or you can do a payment. It's up to you. I've always liked everything to be in the clear, because the IUL and the whole life insurance policies, they have a lot of variables, especially the IUL, because you're tied to the S&P, and it's you never know how well your policy is going to perform. With the term life insurance, it's straightforward. You spend $100, you get $1 million policy. You get sick or injured, you get the money. You die, your family get the money. And that's how I'd recommend everybody should do it. If you guys are interested, I'm done with my walk. If you guys are interested, please comment One Life or text One Life to 910-447-6508. And if you guys have any question, I keep saying you guys, I don't want to say you guys. If you, the person that's watching me, if you have any questions, leave them in the comment below, and I'll definitely reach out myself. Have a wonderful day and best of luck. Bye-bye.
I want you to ask yourself these questions. 1, shifting the financial mindset. If life insurance didn't cost a thing, how much would you need? Let's put cost aside for a moment. If you could have any amount of coverage for free, how much would you need to make sure your family is completely taken care of? 2, educating and understanding. What is your understanding of life insurance and how it works? In your own words, what does life insurance mean to you? 3, highlighting financial responsibilities. What financial responsibilities would your loved ones be left with if you were gone tomorrow? Let's think about the what ifs. If you were no longer here, what financial responsibilities, like a mortgage or future college costs, would your loved ones need to handle? 4, determining coverage duration. How long would your family need financial support if you were no longer here? How many years of financial support do you think your family would need to feel secure if you weren't there to provide for them? 5, introducing living benefits. If you became sick or injured and couldn't work, what would the financial impact be? Beyond just death benefits, have you ever considered how a life insurance policy could help you and your family financially if you became seriously ill or injured and couldn't work? 6, tapping into legacy planning. What would you want life insurance to do for your family beyond just replacing your income? If we could set up a plan to do more than just replace your income, what bigger goals would you want to achieve for your family, like paying off the house or securing their education? 7, reviewing existing coverage. Do you currently have any life insurance? Do you know what it covers and what it doesn't? Do you have any life insurance right now? If so, have you had a chance to look at what it covers and, just as importantly, what it might be missing? 8, quantifying the unpreparedness. If you passed away tomorrow, how long would it take your family to recover financially? If something were to happen unexpectedly, how long do you think it would take your family to get back on their feet financially? 9, identifying affected parties. Who would be financially affected by your passing, and in what ways? Who in your life would be financially impacted if you were no longer here, and what would that impact look like for them? 10, the ultimate gut check. If you knew for sure something would happen to you tomorrow, would you feel confident in your current plan? Let's imagine for a moment you knew for certain something would happen tomorrow. Would you feel completely confident that your family is financially protected right now?
Many divorces don't happen because of a lack of love. They happen because of financial stress. An unexpected illness or accident can force families to deplete their savings, max out credit cards, or even drain their 401k just to survive. That financial strain often leads to arguments, stress, and broken homes. But here's the solution most people don't know about: life insurance with living benefits. If you're diagnosed with a serious illness or suffer a major accident, this policy can pay you while you're still alive. That means you don't have to touch your retirement savings or your 401k. You can focus on recovery, not bills, and keep financial peace at home. Protect your savings. Protect your marriage. Protect your future.